Welcome everyone to this webinar series. This of SheTrades Invest. Specifically, the series is called Meet the Investor, where our investors can tell us a bit more about their offerings, what do they expect from entrepreneurs, and what are the good practices, and run us through everything that we need to know regarding entrepreneurs' expectations and investors' expectations, and what we can then, how we can all work together to ensure that there's better access to finance for specifically women entrepreneurs. SheTrades Invest is dedicated to ensuring fruitful relationship between entrepreneurs and investors, and also to strengthen the financial and managerial capacities of women entrepreneurs, improve their investment readiness, and connect them to impact investors and financiers. At the same time, we also help build a pipeline for investors and also SMEs that are benefiting women. We also have a number of webinar series that take place. We have e-learning courses that cover multiple subjects on finance and investments and business management, and also trade. And also sometimes we have boot camps in certain countries where we work with local accelerators to have a one-on-one session with our local accelerators. So these are a few of the activities that SheTrades Invest does, and we look into expanding this to 2020 and including everyone from everywhere with different subjects. So now that I've spoken a bit more about SheTrades Invest, I'm going to introduce to you our presenters that are from Modifi, who focus on trade finance. So let me just present to you Mr. Benoit to get their bios.
Yeah, hi everyone. Very welcome. Very happy to be here and to spend some time to discuss indeed about trade finance and international trade. So very quick intro on my side. I work with Modifi as a global venture developer. So essentially looking after business development and geographical expansion, sitting in our headquarters in Germany, in Berlin. And I have here with me Vandit, our country head of sales for our Indian office.
Hi everyone. My name is Vandit Mohan. I bring with me about 20 years of experience in banking. I've worked with Citi, Royal Bank of Scotland, ABN AMRO Bank. My expertise lie in working capital financing. And as Ben mentioned, I am currently heading the country sales in India. Over to you, Ben.
So let's, yes, Ben, you can go ahead with the presentation.
Sure. So, yeah, maybe let me share the presentation to everybody first. Laetitia, have you handed over to me for the presentation? Laetitia?
Yes, it is. It's transferring to you. Sorry, that took some time.
Okay. All right, so that should be available now on the screen for everybody.
It is available. We can see.
Okay. Good. So yeah, once again, a very warm welcome for this webinar. So what we want to discuss, of course, today is about trade finance and international trade in general, and a bit more specifically to basically how to finance exports. So the agenda that we've prepared for today. We want to start with international trade and the risk and the challenges involved in international trade first. Then discussing what are the different options, what are the different trade finance instruments, and we will then dig deeper into specifically the trade finance instrument that we are working on. So essentially export factoring. So we will go through a case study, then explain a bit more about how it works. For Modifi and our customers, going to a testimonial of one of our the recent customer, and finally going to an online demo of our platform. And then after that, like Q&A question, which it's like a really interactive session. So if there is any question during the presentation, also don't be shy and feel free to ask questions that we can answer on the spot. Right, but yeah, let me start with some also figures about trade finance, right? So according to the ICC, the International Chamber of Commerce, about 80 to 90% of the world trade relies on trade finance. Which on the one hand seems to be like a very, very high percentage, right? But it also means that 10 to 20% of the trade is basically not intermediated by trade finance instruments. And according to the Asian Development Bank, there is a 1.5 trillion trade finance gap, which like on a yearly basis, which is essentially relies, of course, with SMEs that have like worse access to finance compared to corporate, and especially in Asia. So half of this gap is basically in Asia. And we'll discuss a bit later about Modifi and what we are doing, but definitely our core vision and mission lies around enabling trade by basically reducing this trade finance gap. So why is trade finance so common in international trade? Well, because essentially it solves two main issues that lies with international trade. One is liquidity, cash flow. So we'll discuss a bit later about that. Why is that inherently international trade basically creates funding gaps. But also for risk, right? So, like the risk involved in international trade are way higher compared to domestic trade, and trade finance and the different instruments that are available on the market always try to solve one or two of those issues, either in terms of liquidity and cash flow, or in terms of risk management and risk mitigation. Right. So. Once again, why is that so important, trade finance for international trade, right? So let's dig a bit deeper into those two different issues, right? So liquidity. So we know that if we look at the transaction in international trade, right? So it will all start from the seller, from the exporter, and then the timeline to basically for the goods to reach the buyer is very long in international trade, right? So once the goods are produced by the seller, basically those goods will go to the port terminal. So there is usually a tracking company involved here. Then it arrives to the terminal. There is the customs that will take a few days to clear it. Then it will be basically ready to be onboarded, unloaded on the ship. And then it's on the ship, on the vessel. Usually it will take, it depends on the destination, right? But easily between 15 to 30 or even 40 days to reach the country or the port of destination. And on that side, then the same happen again, right? So the customs will take a few days to clear the goods. Then tracking will be there involved, basically to push the goods up to the warehouse of the buyer, right? So if we take this this cycle, right, from the point it's where it takes the warehouse of the seller to the point where it reaches the warehouse of the buyer. In most of the situation, there is a good minimum 30 days. And that goes like also higher to 30 days to 60, or even a bit more in some situation, right? So because of this, it obviously creates a cash flow gap, right? But who is financing this period, right? So is it when that the buyer has to pay when the seller basically ship the goods or exit the goods from his warehouse, right? So would the buyer have to pay like 60 days in advance? Or does the seller has to wait until it reaches the warehouse of the buyer, and then the seller would have to wait 60 days to get paid, right? So there is really this inherent gap in terms of funding, and that's one of the main purpose of trade finance and one of the main problem that it solves. The second challenge that international trade creates is risk, right? So there are way higher risk in international trade compared to domestic. And we've tried here like to discuss about a few of them, the main ones that are actually covered by trade finance. So first of all, exporter performance risk, right? So let's take the situation where the buyer would have to pay before he gets the goods, or at least partially pay a deposit or down payment before getting the goods, right? So in that case, it means the buyer would always have a performance risk on the exporter. The buyer would have paid, I don't know, 20, 30% in advance. And then it might well be that it's a risk for sure that the seller doesn't export the goods at all, or export some bad quality of good, right? So that's the risk for the buyer. Then in any type of situation, there is always country risk, right? So the buyer and the seller are sitting in two different countries, and they have some obligations and duties to fulfill. And it can be that the country political situation or monetary situation or different types of situation, basically really lying on the risk of the country itself, will basically not able the seller or the buyer to fulfill its obligation, right? This is what lies into country risk. Then we have the transportation risk, right? So either with the trucker or with the shipping line. This is usually easy to mitigate because insurance are like pretty common to cover this transportation risk, but still a risk which is in there. The next one is the price risk, right? So, and especially when we are talking about commodities, like agro commodities is a very good example, grain or rice. So because of this delay of up to 60 days between the point of the goods exiting the seller warehouse to reaching the buyer, well, in that period, the price might very well shift, right? So for commodity goods, that very well be that in 60 days it's not exactly the same price, right, on the market. So most of the time, those variations are not very high. So the buyer is still very happy with the goods that he bought like 60 days in advance. But sometimes it might be like high volatility and high price shift, and that obviously creates some issues. A bit similar to that is the FX risk, right? So once again, depending on when the buyer would pay, then there is FX risk either for the buyer or the seller, right? So if the buyer pays in 90 days, say, the seller will basically wait 90 days for its payments, which is of course like a pain in terms of cash flow. But that's not in the only pain. There is also some FX risk, right? So if for instance, an exporter in India selling in USD has to wait 90 days to get a payment, it can be that in 90 days, the value of USD is lower than what it was 90 days before, right? And then the final risk is importer payment risk, right? So that's credit risk on the buyer, right? So especially in situation where the payment of the buyer is due post shipment, so 30, 60 or 90 days, the seller is taking credit risk on the buyer. And we know that in business, it does happen that the default does happen, and the seller is at risk of not getting his payment, right? So this is like the main risk which are involved in international trade, and also the cash flow issue that we have seen, right? And then when we look at the different trade finance instruments, well, as mentioned, basically they are trying to mitigate the risk and to solve the cash flow gap, right? So we have here like a bunch of instruments, letter of credit, banking guarantee, international factoring, credit insurance. You may have heard about some of them. A very common one is the letter of credit. A letter of credit is basically a guarantee from the bank of the buyer, the importer, that whatever the buyer pays or not, the bank will guarantee the payment to the seller. So it's a very good instrument to mitigate risk, because in that situation, the seller is really insured in a way that the payment will be done by the bank of the buyer. For the buyer, it's also a good instrument because what also happens for the letter of credit is that the payment is due only if the seller fulfills some requirements and conditions. And so in that respect, the buyer is also guaranteed that he will actually get the quantity and the quality that he is expecting. And also on the seller side, this instrument is also good because with the letter of credit, usually access to finance is slightly easier compared to without letter of credit, right? So it's in a way like probably like the most common trade finance instrument, which has a lot of benefits. But in the meantime, it's an instrument which is heavily paper based, so not really fitting the economy and the digitalization that we are encountering like everywhere nowadays, right? It's also an instrument which incurs a lot of banking fees, and back and forth, like and the documents traveling through and routed through banks. And overall, it's an instrument which is like getting less and less popular, right? So the amount of letter of credits on a yearly basis is decreasing year on year. There was a slight peak during the financial crisis because the risk aversion really increased at that time. But now the trend is downward again, to the profit, basically to other types of instruments. And international factoring or export factoring is one of the most important alternative solutions to letter of credits. Right, and this is so as you've probably understood, what Modifi is really focusing on is export factoring. And at that point, I will hand over to Vandit, that will guide us to the case studies and to what we are offering.
Thank you, Ben. Yeah, so if we can move to the next slide. And I think it is the one after that. Yep. Thank you. So we thought we would begin by sharing with you a live case example, so that we can probably give you a better understanding of how the product works. So here, the company that we're talking about, basically dealt in textile and finished goods, finished garments. Their business model was they were exporting to retailers in US and Europe, and had an annual turnover of about $3 million US. Their trade overview was that as far as the mode of shipment was concerned, they were sending by sea, and the Incoterms were freight on board. The payment terms demanded by the buyers were extended credit period. Now, as you would know, this extended credit period actually, puts in a lot of, or throws in a lot of challenges for sellers, namely, rather the exporters. So, what were the challenges that cross to our client? Was one, other than the extended credit period of about 30 to 90 days that the buyer was demanding, which had a concomitant effect of a liquidity crunch on the exporter in India. The bank lines were fully utilized for servicing the previous commitments, and if they went back to the bank to ask for more lines, working capital lines, as you would know, these things come, with a certain extended time frame, and hence probably for them, the exporter, it would have been difficult to service, the new orders that they were getting from the buyers. Also, most, or rather more importantly, what also typically happens is that when you are extending greater credit period to the buyer, you are also wanting an assurance and an insurance against any form of buyer default, right? So these were some of the challenges that the prospect or the client came to us with, and I think the way we solved it is probably going to become a little clearer from the next video that we will show you, and then I'll probably take you through very quickly in bullet points what we did and how we helped solving the problems for the prospect. Ben, could you please move to the next slide?
Hi, Ben. We can't hear the video unless it's needed. You could also use YouTube.
I'm not sure about others, but I don't think Ben is. Yeah, I mean, we're not. The video is audible.
I don't. Okay, so I believe that Benoit, he's just looking into some technicalities, but he will be back shortly.
Yeah, sorry, I think I'm. Maybe we try again with the sound now.
Yep.
Is it working?
No, Ben, I don't think it's working.
All right, I would suggest just to move on. I think I will not solve
Yeah,
this
all right.
question.
Sorry about that. That happens with technology, doesn't it? So yes. So what do? We, as Ben had mentioned, that there are international factoring companies or factoring as a solution for providing financing to exporters globally. That is what we do. Typically, when the client approached us with their challenges, we offered our factoring services to them. Probably in the slide later, after this, we will give you the modus operandi of how operationally the product works. But with the factoring services that we offered the prospect, she was able to grant an extended credit period to the buyer, who in turn extended uh, who extended the order or increased the order size for the seller, and she also got liquidity to grow her business and finance new orders from the buyer. And more importantly, she got the assurance and insurance over the export that she was doing to the buyer, and she could probably engage with more confidence in terms of extending longer credit period to the buyer. Ben, if you go to the next slide, please, then we could talk about the operational aspect of our product. It's the yeah. So this pictogram will typically depict how operationally our product or product offering moves. All that you have to do is follow the numbers on top of the arrows. So the buyer is on the left and the exporter, or rather the seller is on the left and the buyer is on the right hand side. So as a first step, you would notice that there is a purchase order that comes from the buyer to the seller, upon which the seller will source or manufacture and export to the buyer. Once the shipment is done along with the invoice, the third step is that the seller would upload their shipping documents, the entire set of documents that actually go to the buyer, onto our platform. Once that is done, we extend 80% of the invoice value within 2 working days to the buyer. So the liquidity is available instantaneously. The fifth step is, once we receive the full funding from the buyer, we pay out the balance 20% to the seller in India. So as a result, the seller is happy to receive instant liquidity. Second, as we mentioned, the time frame that is involved in getting this liquidity, which is very very short as compared to traditional ways of banking products. And third is that, of course, you have a guarantee and some sort of insurance over the shipment that you're making, and that there is you're guaranteed of money being receivable, money being received for the shipment that you're doing. Can we move to the next slide, please, Ben? Or do you want to go a slide before and we open up the forum for any questions that people may have, or they may want to share their experience about financing or their current financing predicaments at the moment?
Excellent. Yes, everyone, this is your opportunity to ask any questions. Please write your questions on the chat box, and we'll make sure to answer your questions. Thank you so much. And Benoit, Vendit, what is your criteria in order for these women to get trade finance?
Yeah, so see, the thing is that we will probably in the presentation also take you through that, but since you asked the question here, the criteria is very simple.
Sorry, is it still ahead?
Yeah, no problem. It's it's a very good question. We can address it now. Typically, what we are looking at is an operational experience of about 2 years in exports. and beyond that, normal KYC documents, financials for past 2 years, and that is that as far as the seller is concerned. But more importantly, we look at the credit worthiness of the buyer that they are dealing with. So it's a fairly simple process. While what I'm saying may have taken longer than probably the swiftness with which we can arrange for financing once we have the buyer details from the exporters here in India. All right, so I see some questions here.
Vendit, would you like to read the questions and answer this, or
Yep.
you would go with it? Okay, go ahead.
Yeah, I can do that. I think the first question is, can you fund by seeing mere invoices? Well, as I mentioned a little while ago, what we need to do is to understand which are the buyers whose invoices the exporter would like to have discounted through us. Why we say that is we do a quick credit worthiness check of the buyer overseas. Once we have go ahead by insurers, we come back and understand the kind of volumes that the exporters in India would be doing with the buyer overseas, and what is the limit that they would be comfortable with. And once done, and we have done the due diligence that is required to be done in terms of the sellers in India, we can, upon uploading of the invoices, we can discount them within 48 hours. I hope that answers that question. Okay, I think this is moving a little fast. Is the similar methodology being utilized for adapting to the digital financial services techniques for fund transfers? I'm really not sure what that question means. If you're asking us, do the fund transfer, is it similar to, say, digital fund transfer in India? Well, correct me if my understanding is right post my answering your query here. If it doesn't address, probably you can raise the question again. It's pretty much similar. The only thing is that we are funding from our Netherlands office, and the remittance would happen in a similar fashion as any international remittance comes through through the Swift account details that you share of your bank, and it takes about 48 hours for the amount to hit your bank account in India. Can we ask our buyers to get in touch with you? It's the other way around. You see, what happens is typically we take the buyer details from the sellers or exporters in India. Once we have the names, we do the creditworthiness check and get back to you whether the buyer is approved by insurer or not. If they are approved, we get an understanding from you the kind of limit that you would require on those buyers, and then apply for limits on those buyers. So yeah, as a first step, it is basically essentially sharing names of your buyers whose invoices you would like to get funded. All right, I think those are the questions that came across to us. All right, one more. It says, do you give credit to purchase the product as well? So if you're talking about packing credit or pre-shipment financing, as of now, we're not doing that. Typically, to offer pre-shipment financing in India, you require a banking license, and at the moment, we're not very keen to do that. Probably at a later time and date. Yeah, I hope. All right.
Just maybe to add on this point, what happens is that when we finance on a post shipment basis, we unlock cash which is basically locked into receivables, right? And then this cash, of course, can be used to also purchase new goods, right? So it's definitely our solution definitely helps to a company to grow. It's just that we are not financing the first trade in terms of pre-shipment to source the first good, right? So the exporter in a way has to finance this first shipment, and then with working with us basically helps to accelerate that.
I've got one more question, and which is, what is the limit of funding? So typically, the limit is set on the trade history that you may have with the buyer, and the limits that you're looking for basis your future trade. We take this understanding from you and apply for limits basis that understanding with our insurer, and subject to their approval, we confirm the limits to you. So actually, there is no fixed limit. You can actually be comfortable in applying for higher limits based on what your understanding of your future prospect of trade with the buyer is. If you think basis a factoring facility, you can do higher volume of trade. We'd be happy to apply for similar limits with our insurer. If the insurer gives us the go ahead, you can trade with the buyer for larger volumes. Okay, and I think I have two more. Would there be a provision of advertising techniques for the exportable product also in the financial aspects platform? I'm not sure if I've got this right too, but if you're asking us, can a seller advertise on our platform? Well, not at the moment, I would think. It's a digital platform for for providing financial solutions. So it's like a payment gateway that you have. It's only for the only difference being that it is for international trade at the moment. But who knows? But in sometime in the future maybe, but not at the moment. The second question is, what I understand, you only facilitate post-shipment finance. What is rate of interest? How are you different from Indian banks then? Often exporters face funding problems, pre-shipment, any support in this regard? All right, so interesting. Yes. So let me go in the reverse order. Often, as you inquired, any support in terms of funding for pre-shipment? Well, my colleague Ben did answer that a little while ago. So typically, what happens is that once we start discounting your bills, you are actually provided with liquidity that would help you in carrying on with your trade. So basically, yes, the liquidity is available immediately, and hence you can use that money while it is a post shipment product, but you can actually use the same money to manufacture / source goods. Yeah, but if you ask me per se in terms of a pre-shipment product, no, not at the moment. How are we different from Indian banks? Very pertinent question. We would have come to that a little later, but since you've inquired, see, typically within banks in India, you are required to furnish a collateral, right? So with us, there is no requirement of collateral or any form of personal guarantees, etc. So that is the beauty. That is the beauty of this product. We would have come to this a little later, but now that the cat is out of the bag, this is one of the strongest USPs of the product. It is absolutely collateral free, and it is requires no guarantee from the Indian seller at any point in time. Thanks, Ben. So I think this was the next slide that would have addressed all issues or these questions that you had. So what's different is that we are fast. Once you're onboarded onto a platform and you upload your invoices and your shipping documents, the money is available to you within 48 hours in your account. It's convenient because you can apply for finance anytime and anywhere, across the globe. You could be sitting anywhere and you could apply for financing if you have the documents. All that you have to do is put your documents, or rather log into our platform and upload your documents. It does not require any collateral. It does not require any personal guarantee, etc. And it's a seamless onboarding process. It's a totally digital platform. There are no hard copies of documents flowing between the company or the exporter, like in other financial institutions. It is absolutely digital. So as in fact my colleague Ben had pointed out a little while ago, the difference between, say, like traditional banking products like LCs and us is the amount of time that takes in whether it's in compilation of documents for sending across to the buyers, post you receive an LC through the banking system, or otherwise it becomes just too cumbersome. But here with our platform, it is absolutely document free. Once you have so to say, once you're on the platform, all that we require are digital copies of your shipping documents. So whether it is commercial invoice, bill of lading, purchase order, all that is uploaded onto our platform. We require no hard copies, and post-batch, within 48 hours, your account is funded with the money. Third important thing, or our USP, is that it covers the credit risk of the buyer. Right, so it's practically like an ECGC cover. You get, once you upload the invoices, we pay you up to 80%. So in a manner, it is even better than ECGC, where you get more, you get your money in case of a default post factos, after so to say you file in your papers, etc., and go through all the rigmaroles and hassles of dealing with people there, and not to state the so to say red tapeism and bureaucracy, if I may put it that way. Here the money is available to you within 48 hours. The entire call is on the buyer, and there is risk insurance on your trade. Right. So these are the three main USPs that we have over any other traditional banking product that is available for working capital financing. So I've got another question that I may take up. For first-time exporters in handicrafts and eco-friendly shopping bags, what is your recommendation to go ahead? So look, for the time being, our product basically requires, as I mentioned earlier, about 2 years of export history. But we are happy to look at first-time exporters if there is some prior experience in exports, whether through group companies, or say, let me put it this way, that primarily I would say through group companies, but if there is any other form which basically gives us an understanding of a 2-year history of trade, we'll be happy to look at that as well. Yep. So can we move to the next slide now? So as they say, proof of the pudding lies in tasting it. So we thought we will share with you a testimonial of our client. Modifi, as I said, was the right fit because we offered quick solutions to his financial requirements. What we provided was a very quick response and immediate action upon their call. Our product offering was more versatile than other factoring companies. As we mentioned earlier, that our factoring product is non-recourse and non-collateralized. So typically the call is on the buyer. There is nothing that we require from the seller other than as basic financials and KYC to onboard. Our call is primarily on the buyer, and we do a credit worthiness check on the buyer. Also, in terms of collateral, we require only, or rather, we don't require anything. Our only requirement is before we start trade is to get an understanding of the buyer for whose invoices you would like to avail financing for. So so in terms of versatility, we are by far much agile and easier in terms of offering. Other than that, flexibility in funding is something that we offer. The limits that you require are basically on your requirement of trade with the buyer, and unlike banking institutions where they charge fees on the limits that they set, there are no fees on limits or on the so it is typically on the shipment that you make. And unlike banks, we do not charge any fees for setting up of credit lines on the buyer. I quote what the seller had to say for us, that Modifi provided us with leverage to accept business beyond our existing limits. In a way, since I had personally acquired this client, I can tell you their volumes actually doubled after practically 2 months of taking our product, because they had instant liquidity available, and that gave them the confidence to enhance and take higher volume of business from the international buyer. Ben, the next slide, please. I think this is where you take over.
Right. Yeah, indeed. Yeah. So, yeah, the last slide was about a testimonial, but we also thought like the best way is also to show a bit around our platform and what it looks like. To also like demonstrate, right, how simple is it, how fast is it, and how accessible is it, like 24/7 online. So right, this is basically the dashboard for our exporters. So this is a summary, right, of like the total limit that has been used and the invoices. So here we can see the payout. So this is essentially invoices and shipment that has been done, invoices that have been submitted to us, and where we are about to pay. But let's look at like once an exporter has a new shipment that just happened and got an invoice and wants to get the funding. How does that look like, right? So, and the steps that need to be made at that point, right? So, first of all, we start with the invoice detail by uploading the invoice, right? So I'm doing that now. And our system will basically read the invoice to try to pre-fill as much information as we can read. Right. So here we can see we have read the amount of the invoice. For some reason, the currency was missing. We have read also the invoice number. We have read the issue dates, not the due date. So let's take an assumption that it's a 60 days invoice. So really like the feature of the invoice, right? Amount and payment term, very important, of course. Oh, let me just go back. So yeah, once we have the invoice amount and the payment term, we also directly here calculate the total cost for the exporter. So very transparent, very clear upfront before to really get the funding. What would that cost? Then the next step would be to select the buyer. So usually the buyer is like it's pre-filled, and confirming the mode of transportation. So sea transportation and the Incoterm. Once again, that has been read from the invoice that we have uploaded. And then it's the upload of the other shipping documents, right? So typically there is a PO. I'm uploading a purchase order here. There are also some transportation documents, so I'm uploading a bill of lading. And there may be additional documents, such as the packing list, certificates. So uploading those files here. Right, then the exporter would just simply click on upload. Yeah. And the last step is just to review the invoice that has been just created, right? So in the summary, we have here the total amount of the invoice, the payout. So what we pay immediately is the 50%. What we will pay is 80%, sorry, so 54,000. What we will pay once the buyer pays is the balance of 20%. And here we have the fees, right? So very clear summary. If the exporter is very happy with all of that, he would submit the order. And that's basically it, right? So then it's on our side, and like usually 48 hours later, the payment will be in the hitting the bank account of the exporter, right? Just a quick one to show a bit around the platform. I'm also like really mindful of the time. I think we are like almost there. But I guess we're very happy to take any further questions if there is remaining points to clarify.
Excellent. Thank you so much, Benoit and Vandit. So if any of you have any questions, please take the opportunity now. If not, we will be sending you an evaluation form and then the link to this webinar and the PDF file. You can use the chat box to ask your questions. I think Vandit, they really bombarded you with questions earlier on.
Well, I hope I addressed them.
So we're going to be waiting. Please take this opportunity to ask any questions in regard to trade finance. So the criteria has been covered. Platform Benoit has gone with us. There are no questions. I guess it's quite clear.
I think there is one that is
All right.
through. Okay, are you also facilitating to scout buyers also for our business vertical? Very good question. I think Ben would be a better person to answer from a platform perspective. But I'll tell you something. Since it's a digital company, we have a lot of details available with us in terms of our clients, who are they dealing with, in terms of who are the buyers overseas. We are also doing another product based out of Germany. So we have details of how do I put it, sellers. Those are supplying to those buyers based in Germany. So we have a whole lot of data available on our platform, and at some point in time, at a future date, yes, we may be able to facilitate that. But currently, that feature may not be available on our platform. Ben, would you like to add something to that?
No, indeed. I think, I mean, that's it's a feedback which is coming also very frequently, and I think that that's the second question that we have about that topic, right? About how can we also facilitate trade in terms of matching buyers and seller, finding new buyers for the seller. I think we have, indeed, like also received this feedback in the past, and a very, very relevant point. For now it's not a feature that we have, but definitely something that is of interest for us, probably for the future.
I think there's another one that has come up. In fact, two. I think the first one is in continuation to the previous question, also helping us to avail the ISO GOTS and other compliance certification in terms of your company's endorsement, helping us to close the deal. I'm really not aware of that. I'm sorry, I'll have to get back to you on that question, unless Ben, you can address that. I don't think we can endorse, but we can check and get back. For the other question, what's for the objective of utilization of the trade information services platform? Is there certain finance provided to the seller is also? And I'm not too sure if I've got the question right. The product that we are offering is for sellers. So when I say sellers, the terminology is loosely used for all exporters based out of India. So yes, it is a seller finance platform, but only for international trade. I hope that addresses your query.
Okay, we're going to be taking one more question, and then we would wrap up. So please take this opportunity to ask any question that you might have, and proceed on to the next steps. Excellent. Benoit, Vendit, do you have any final words or any recommendations or anything that women entrepreneurs who are trading or want to start to trade to keep in mind? If you could please just highlight a few points, any takeaways from this webinar, that would be excellent.
Yeah, I mean, for me, I would really highlight that like international trade is a tremendous opportunity for any entrepreneur in terms of opening new markets. Right, we are in a global world. The markets outside of the domestic country and outside of India, I mean, it's really huge opportunity to take on. But of course, as we have seen, that also creates some challenges, right? So one is financing, and the second is risk, because risk is higher in international trade compared to domestic trade. And basically, the solution that we offer really helps to cover the funding gap, but also the risk mitigation with the default protection on the buyer, right? So we hope that we can really help entrepreneurs in going also into more international trade and more export, which is really the mission of Modifi. We are also highly focused and committed on India and emerging countries in general. Although India is the first and only one that we are serving for now. but definitely our mission and purpose into what we are doing here.
So I think Ben has addressed all of it. I would only say, or rather underline a couple of things that he mentioned. One is that in international trade, which is slightly more riskier because you're entering, domains and shores and areas beyond the comfort zone of your own country, thereby having a partner that can evaluate the credit worthiness of an offshore buyer is of utmost importance, and we can do that for you. Secondly, while you have established the credit worthiness of the buyer, I think what is then required is the availability of funds, and not just availability of funds but immediate availability of funds to get on deals and to probably fulfill the commitments of trade. We provide that too. Third, and I think of utmost importance, is the convenience, wherein you have everything available on your laptop, whether it is uploading of documents, or actually um, getting the so to say, or rather the availability of finance. Everything is digital and absolutely practically at your doorstep. So the convenience is unmatchable, and we offer all this through one platform. And I think, as Ben mentioned, we are committed to India. In fact, our founders had some time back mentioned that we want to make it a $100 billion market for Modifi. So that is my bit.
Excellent. Thank you so much. There's one more question, because I know that Pretty, she is loyal. She always attends our webinar. So Pretty, thank you so much. She's asking, is there any limitation on the amount and restrictions for any particular country?
All right. So, is there any limitation on the amount? So, as I said, there is absolutely no limitations per se. There are a couple of things that we look at. One for sure is the past trade history that you may have with the buyer in terms of the volume of business that you've done with the buyer. That is just to get a sense of what is the limit that we need to help you with. See, uh, uh, while finance is essential, but overburdening yourself with it is also doesn't make sense. So yes, so we get an understanding of what is the trade history that you have with the buyer. Secondly, what is the limit that you will require, or the enhanced limit that you would require. We get an understanding of that, and of course we seek your consent on that as well. We go to our insurance company and apply for the limit. Now, this is the essential part. Now, the insurer, if they give us the go ahead, we are okay with the limit that you've asked for. And yeah, you're free to use that limit with the buyer. Are there any particular countries that, so at the moment, the countries that we are servicing are 11 countries in Europe. We're doing USA, Canada, we're doing Australia, we're doing Singapore. And little selectively in the GCC region. So I think we have a fairly, let me put this, handsome geographical footprints available across the globe.
Okay, so ladies, we'll have to
sorry, there's one more that has come up. Would you mind me taking that?
No, please do, because it is very good questions. So please do go ahead and answer them, because at the end of the day, we're all talking about international trade and the questions are very relevant. So yes, but then we will to end. Thank you.
Yeah, so unfortunately, Ghana we're not covering at the moment. My best bet would be to use probably your bank there. which is the other one, but some countries most should be under caution or radar in terms of international trade as there is political disturbance. So yeah, we would be happy to share with you the list of countries that we cover currently, and you would notice that it is a fairly extensive list at that. It practically covers Europe, and in fact, the major trading partners of there get covered in that.
Excellent.
So I think I saw in the question, like there were like specifically two countries mentioned. One was Ghana, the other one was Dubai. So Ghana, and unfortunately, like Africa is per all credit insurer, like very little coverage. So in Africa, as of now, we only cover South Africa. In terms of Dubai, yes, we do cover Dubai. With some and Dubai is definitely not the most easy country to get coverage. So in general, we do cover it. But if you compare to other countries, it's a bit more difficult to get significant credit limits.
Good. To everyone, thank you for participating in this webinar and being active and asking questions. And to Benoit and Bandit, thank you so much for your time and explaining and running through with us what is trade finance, what does Modifi provide, and actually going through the platform as well, which I think was very interesting. To everyone, all of our participants, we will be sending out an email asking you to evaluate this webinar, and those who do evaluate it, we are going to send a PDF file of this information along with the webinar link. So yes, thank you everyone on behalf of SheTrades and SheTrades Invest. My name is Leticia Johnson, and I wish you a good end of the year and a good entry to 2020. And hopefully we will all be seeing each other or connecting directly or indirectly. So yes, for the women who have not applied to SheTrades Invest, please do apply to SheTrades Invest because more opportunities will be coming up. We need to know what are your financing needs, and so we can connect you with the right impact investor. Try it, also trade finance or any working capital. So this is why we are here. We are here for you. All right, everyone. Thank you so much, and enjoy the rest of your day. Benoit, Vandit, thank you again.
Thank you, Leticia.
And thanks to the SheTrades initiative. It was really a pleasure to be able to share a bit about what we are doing in trade finance in general.
Brilliant. Thank you.
Thank you.
Goodbye, everyone.